हेलो दोस्तों, बहुत बहुत स्वागत है हमारे यूट्यूब चैनल स्टॉकनोमिया पे। ये स्टॉक टॉक का एपिसोड 2 है और आज हमारे साथ मार्केट्स एक्सपर्ट फंडामेंटल एनालिस्ट विनीत बोलांजकर, हेड ऑफ वेंचुरा सिक्योरिटीज हमारे साथ है। वेलकम सर, वेलकम टू आवर शो।
Thank you for having me, Anmol.
So Vinit sir did his BTech from DY Patil College of Engineering. After that, he completed his MBA from Jamnanar Birla Institute of Management. So he started his career as a sales trader. After that, he became a proprietary trader. So with his keen interest in market, as we all know, he's the head of Ventura Securities. He's also the founder of School of Market Studies. He appears in various news channels like ET Now, Bloomberg as a market guest. So, sir, let us start with the question. Sir, please tell us about your journey. Like, how did you started investing?
So, 1992, I started investing, and it was quite a freak of chance. So, I was in my first job then, and I used to work as a civil engineer for about 6 months. And, so I came across this one small newspaper used to be weekly, which used to come out. So, I used to go through all the tips of that, and I started with that actually, reading up, and it really got me hooked onto the markets. So that journey has continued since 1992, and it's been a very long journey since then. I tasted very early blood when I borrowed some money from my aunt and invested in the markets. And once I made money on that stock, I remember the first share that I bought was Tata Steel and SR Steel. And I made, 30, 40 rupees per share during those times, those days. And that really got me going. So
That's
that's
great,
how
sir.
yeah.
Sir, you have spent so much time in markets. So please tell us about your worst and best experiences in market.
So my best experience in the market has been identifying multi-baggers and taking those stocks and you know the art of investing or the journey of investing. So I'll tell you one very important story is that I used to work with Dresdner Kleinwort Benson, and I was very interested in research, although I was in the trading side of the business. So one day I fixed up an appointment with Mastec. I bunked my day, and it was a very heavy rainy day. And I still went all the way to Seeps in Andheri. And when I reached the gates of Mastec, I had an appointment with the CFO. And when I reached there, I was told that my meeting is next day. So I was extremely dejected because I had confirmed for the meeting that day. And what I did is I did not give up hope because it was not possible for me to, bunk one more day of work and come back there. So I just decided I have to get in. So I went to another office of Mastec, and I got a gate pass from there. I went into Seeps, and when I reached there, I met the CFO's executive assistant. So I reached there, Mastec's office. The CFO was not, the executive assistant was there, and from him I just learned that Mastec had orders worth, I still remember that they had business for $10 million from the US and 20 million pounds from UK. So that information I had, and I really didn't know what to make of it. So I got slightly disappointed. I went and sat in the, but I still did not go home. I just went to the canteen of Mastec, and while I was having a sandwich out there, one of my, engineering friends walked in. He was actually working in Mastec. So I sat there, and he helped me, and he was a very good friend of mine, and he helped me go through all the various things that were happening in Mastec. And what I realized is, he took me out for a round of the place, uh, of their campus, and I realized that everywhere rooms are booked, people are standing, all the meeting rooms are overcrowded. So I just realized that there is huge amount of work happening. And that time, Mastec was not a very quality stock. The management was always considered kind of, on the downside. But I was very excited. I took all those numbers. I came home. I sat throughout the night. And, I remember there was a prime security sell report on Mastec. I took that report. I learned financial analysis from that actually. I
Ah,
took that, I did my own forecast. I came to some numbers which told me that this stock was going to really fly. I was so happy when I went to work the next day. I told all my clients to buy that stock. I also bought some. And then this stock went on to be a multi-bagger. So I remember it went up at least 40, 50 times, in a span of about 2 years. So, identifying these kind of stocks really gives you a thrill, and that really set me up. And, that was my, you know, one of the greatest crowning moments of my career. After that, I have seen a number of multi-bagger wins, but this was one which really stuck with me. And I think among the the worst experiences that I've had in my career has been in 2018. When a few of the recommendations which I had made, you know, they really bombed, and that really gave me a sense that the market is the biggest leveler. So right now, as we speak, the focus is entirely on quality. I've redesigned my investment outlook. For me, 80% is the people behind the business. So the management, the leadership team, segment in which they operate is the single most important thing. Numbers come after that. So if this aspect is not good, then I won't be buying that stock come what may.
Thank you, sir, for sharing your experiences. So, next question is, sir, Modi government announced a 20 lakh stimulus package for the Indian economy. Do you see Indian economy heading towards the Atmanirbhar Bharat? If yes, which sectors could emerge as a winner of the Atmanirbhar Bharat package?
So I think that 20 lakh crore package is lipstick on a pig. It's not going to be enough. And we have to understand one thing that, these kind of packages is what the government is able to do most, or the best case, they put the best foot forward. So resources available with themselves without, resorting to fiscal priming of the economy. They've tried to do their best. But given that, I think, more than this is, I am looking to see a trend if people are actually shifting manufacturing base from China to India. There's a lot of noise. Okay, we have yet to see the traction. One or two players have set up. It's not going to happen in a day. Okay, but we would have liked to see some big bang announcements which have not come. And I understand that given the fact that China is involved with that, it would be a sort of a gradual wave, a tsunami which will build up. So it's going to take a little time. And I think given that on a long term or a decadal perspective, I think manufacturing is one of the very bright spots in the markets where you should be. Second is, I think the power sector looks very, very interesting given the fact that government is giving a lot of incentives, and packages are there. Apart from this, pharma continues to be the mainstay. We have seen on a cyclical side, the pharma industry not do that well for the last 3, 4 years. I think that has turned around. And I think one of the stocks where, very large wealth can be created is going to be the chemical space. So these are my four go-to areas. And if you ask me one more sector which I'd be looking to invest, is going to be in the hardware and software space. So when we talk of software, I am expecting that, the legacy business we had seen a decade of slow growth. But once that legacy business is kind of run out, I think when digitalization becomes a large portion of your business and which is growing very fast, then the growth will come back again. So I think these are the places to be in. And also, if you, so these are some of the sectors to look at, but, I think that this COVID meltdown has provided us with a significant opportunity in the discretionary consumption space. And, if you were to take a view which goes a little beyond 3 to 5 years, I think you're going to be sitting there on multi-bagger stock ideas. So these are my broad areas where I'm looking at. Of course, here you have to narrow down on the good businesses. You have to find businesses with moats, competitive advantage, and aggressive growth. So these are what is required for the markets to do well.
Thank you, sir, for your insights. So next question is that, sir, retail investors have the feeling of missing out. They think that a stock has reached a high and commands a premium valuation and it will not go up. But we have seen situations that despite a stock commanding premium valuation, still stock continues to deliver stellar returns. So what advice would you like to give our viewers?
So, we have to understand a few things is that in today's world, there is a winner takes it all kind of environment that is present. If you see the FANG stocks, there's total dominance of a segment. They're dominating everywhere. So businesses which have got dominant models are going to experience high valuations which are justified only when the cycle plays out, right? So in my opinion, if the business model is dominant, and in India, we are an under-penetrated market. So I don't see, the growth stopping. In fact, with these kind of disruptions that we have, like COVID or, a banking financial crisis, it actually strengthens the players with strong balance sheets. Okay, they're able to expand even in a dull market because they grow through market share. And when the business cycle normalizes, they'll have growth coming in. So, their growth is going to continue. This is one theme of quality. The second theme is, as I spoke of market penetration, is from unorganized to organized. So a large part of our market is underpenetrated. It's in the unorganized sector. And then, the smaller players will and the weaker players will wield space to the larger players. So you are going to have uh, more than normal growth in all these stocks, and hence their valuations are kind of justified. Another factor is on the supply side, with ESG investing becoming the norm, and when you're avoiding stocks which are environmentally sensitive, those who do not respect social obligations, and third is where there is significant corporate governance issues which are very high in India. What is going to happen is that large funds globally are going to move a lot of capital into fewer stocks. So that is going to lead to a kind of concentration, and our markets are illiquid in the sense that India, the promoter holdings are very high, so the floating stock is very low, and because of this, the scarcity of stock also plays an impact. The fourth factor is we have to understand that the only way to get out of the financial mess which was started in 2007 is to keep kicking the can down the road. You cannot risk a deflation or a depression. So I think they're going to print them way out. We are going to have inflation, and in inflationary environment, stocks do very well. And these businesses which are dominant will have the pricing power, and they will expand their margins. And so this printing of money will not only improve their status, but also lead to further thrust in equities. So as I teach my students the concept of earnings yield, right? So what happens is that when you print cheap money, right, the bond yields fall, the earnings yield come down, and the PE expands.
Yes, sir. Lastly, what advice would you like to give novice investors for starting with fundamental analysis?
So as I say, keep it simple, invest in good quality companies. As I said, see that they have a dominant business with good moats. They're running in very strong industries. They have a very, very strong leadership team, and there is the body languages of a lot of aggression. That is very important. So if you keep these things in mind and you do little math on the number side as they keep coming out, and you keep tracking those quarterly results that come and the announcements that the companies make, and are the companies, justifying those through their performance, then I think you got it covered. And in my mind, equities is one market which will help you to get your financial freedom. And one thing I wanted to apprise investors is that don't be under the impression that debt market don't have risks. If you notice in these days, the debt markets carry as much risk as equity markets. Okay, so for the pathetic yields that you get in debt, okay, for the same kind of risk that you're taking, I think on a risk adjusted basis, I think equities offers a very, very good investment avenue. Having said that, right now in an overheated market, you should be looking at pockets where the valuations are cheap. The differential between the large cap and the small cap is very, very big. But do small allocations, go into the small cap or the mid cap sectors, and you will definitely get rewarded, but not without compromising on the fundamentals that I spoke about.
Thank you, sir. Thank you for your time. So guys, if
Thank
you
you.
like our channel show, so please like and subscribe.